welcome to Parkyd Digital's podcast. I'm your host Ashams and I have with me co-host Sufi. Today we're going to talk about recession hitting North America, a pretty big deal in the world economy right now. But before we get all deep into that, let's start with the basics. Sufi, can you break down for us what exactly is a recession and how do we figure out if we are actually in one?
Surely, Ashams. So, recession is basically when the economy takes a hit and it shrinks for more than just a few months. This usually means a drop in things like GDP, income, jobs, and there are other certain economic indicators. We are talking about a time when things are not generally looking very rosy for everyone.
So it's basically like the economy is taking a bit of a beating, yeah?
Yeah, that's actually a good way to describe it. And we can tell if we are in a recession right now by looking at how much these indicators drop and for how long the time it takes for these indicators to bounce back from the struggle, from the recession, from the drop.
Okay, clear enough. I think we have a slightly better understanding and a clear definition of it. So now we are all on the same page about recession. So let's zoom in on North America. Has the recession already started there?
Well, according to the people at the International Monetary Fund, North America's GDP took a 3.6% hit in 2020 during the pandemic. And that's actually a bit less when you look at the global average, which was 3.9%. But the interesting thing is, this economic recession situation is different in each of the major countries. I'm talking about the United States of America, Canada, and Mexico.
Oh, that's pretty intriguing. So what's been going on in each of these places?
Okay, so let's start with the biggest of the fishes, United States of America.
Okay.
Their economy shrank by 3.5% in 2020, which was the worst drop since way back in 1946.
Okay.
Like, this was mainly due to lockdowns, social distancing, and especially in industries like the hospitality, retail chains, educational institutions, entertainment, those kind of things. Those industries were mostly affected.
So I think basically the places where people gather or people are used to gathering, and that must have been a tough hit.
Exactly. Many of these businesses had to shut down, for the time being, and in some sad cases, some businesses went out, like they shut down shop permanently. And because of this, a lot of people lost their jobs, and there was reduced income going around. The people didn't have enough money. So at the peak of this, the US unemployment rate jumped from a low 3.5% to a very terrifying, scary 14.8%. Like, just imagine, from 3.5 to 14.8. And that was in April 2020. It was the highest ever recorded ever since the Great Depression.
I think when you say that from 3.5, when you see it in terms of numbers, 3.5 to 14.8, that's a big leap.
Yeah, exactly. Even a decimal point of increment can have a huge difference. So you can imagine, like, almost how much? 11%?
Yeah. Yes.
11% increase in unemployment rate.
Yeah, that's a big jump. Yeah.
Yeah, and because all of this mess, people started reducing their spending, their expenditure. And this people spending their money on shopping, this is a major driver of the US economy.
Okay.
Thrives on people's shopping sprees, you can say. So 70% of the economy is driven by this consumer spending factor. And when people start losing their jobs, they have low income. Like, they're not going to be spending so much on shopping, they're just going to be spending money on the essential stuff. And that's what happened.
That actually totally makes sense.
Yeah. Plus the global trade and oil prices, they also plummeted during the pandemic. Now the US is a very important player in exporting as well as importing goods and services from all over the world. So when other countries started struggling during the pandemic, obviously their demand for the goods generated in the United States that reduced, obviously. So the US imports dipped because people's wallets tightened.
And those oil prices, like you said, they drop like crazy, right?
Yeah, oil prices really crashed big time in 2020. Like there was a double whammy, less demand from a world in lockdown and a price war between Saudi Arabia and Russia. They couldn't agree on how much to cut oil production to stabilize things. So they started pumping out even more and more oil. Like they thought it would drive prices way down. Now we are talking about a reduction from $60 a barrel to below $20 for one barrel.
Oh, that's a serious plummet.
Yeah, that's $40 reduction in per barrel price for oil.
Yes.
Yeah, and this reduction in oil prices majorly affected the oil industry of US. And this oil industry is actually a very big deal in some parts of the United States. So many companies, oil companies, they had to reduce their production.
Okay.
Which in turn resulted in layoffs and even bankruptcy for some companies. Yeah, this added more to the problem.
Okay. So the US faced a bunch of problems in 2020, and yeah, thanks to the pandemic, like you said, and its ripple effects. But did the government step in to help out, and did the economy get back on track?
The government actually launched a massive, and when I say massive, I really mean it. They launched a massive fiscal and monetary stimulus package, which was about 20% of the GDP. And they started spending more money and cutting taxes to boost the economy. Plus, they started reducing the interest rates, and they began pumping more money into the system so that it would be easier and cheaper for small businesses to borrow money, take some loan, survive in the middle of the crisis, that sort of thing.
Okay. So these are some of the usual practices, like you pointed out. So can you give me a bit more or some more examples of what the government interfered and what they did in this particular case?
Of course, Ashams. I can give you some examples very quickly. So on the fiscal side, the US Congress passed relief packages worth over $5 trillion.
Oh.
This included stuff like direct cash payments to households, financial help for businesses, tax breaks, credit guarantees, and cash injections. They basically wanted to support folks and businesses hit hard by the pandemic and prevent a wave of financial collapses.
Okay, so now you spoke about the fiscal side of things. What about the monetary side?
Like I mentioned before, the Federal Reserve started reducing interest rates close to almost zero. And in addition to that, they started buying up assets. It means that they grabbed bonds and other stuff from banks to boost their cash reserves. This was done so as to encourage them to lend more. And in addition to that, they also set up new lending systems, to give better credit to different parts of the economy, like households, small businesses, big corporations, governments, even foreign central banks.
Okay. So from what you said, what I understood in very layman's terms, it's basically so they pumped in a lot of money into the system, right?
Yeah, actually the goal of these things was to mainly give a jump start to the economy.
Okay.
So these actions helped to soften the economic blow and kept things from getting worse. Plus, they supported a bit of recovery in the second half of 2020. Around the time when lockdowns were eased up and people started feeling a bit more hopeful. Like, okay, I can take off my mask, I can go out, I can chill with my family without worrying about the virus getting me. But unfortunately, new waves of the virus and its variants, they threw a spanner in the works and they created fresh challenges and uncertainties. and thus because of that, the International Monetary Fund predicted the US GDP to jump by 6.4% in 2021 and 3.5% in 2022. This was driven by the rapid vaccine rollout and continued government support, the pent-up demand waiting to be unleashed.
Okay, you in what you said, you mentioned a term just now, pent-up demand. Can you explain that a bit?
Yeah, certainly. So pent-up demand is like a big economic energy waiting to be released. I'll give you an example. Imagine folks who put off buying a car or going on a vacation or sometimes even dining out because of the pandemic. A lot of people were doing that, right? They didn't go out, they couldn't spend a lot of cash. So they had plans to buy a car or a house or go on a vacation, and they had to postpone that. So when lockdowns were eased and these stimulus packages started to roll out, they started feeling safer, the people who were holding back their spending plans. And this thing made it possible for them to go ahead and make those purchases.
Okay.
This pent-up demand that was there, it was allowed to be released.
So basically, people got more money so that they could spend too.
Yeah, but this thing also came with its own challenges and risks.
Okay. Okay. So there is hope for an economic rebound, and even though there is a hope, you're saying that there are so many challenges and risks that they'll be more likely than not to face, right? Like risk, like what?
Stuff like how the pandemic evolves and how effective vaccinations actually were, the pace of reopening, and as well as the lasting effect on workers and businesses.
Okay.
And tackling underlying structural issues, inequalities in the industries. These are just some of the challenges that I mentioned. Like these are the major ones. Like some workers and businesses struggled to fully recover. Some workers lost their skills and even their jobs permanently. Some businesses couldn't bounce back due to lack of training or due to shifts in demand or due to much more technology required. So think about people who lost jobs in industries that rely heavily on physical presence. It might be hard for them to find work elsewhere, right? Like without the proper retraining.
Yes. So I see. So there is a lot that plays into the pace and quality of the US economic recovery, right?
Exactly. And remember, the US economy isn't just the only one suffering. Like what happens in other countries also has a huge influence. Like it's just not the US economy that's going to affect the international global trade, the global economy. Lots of other countries are also in the play for this.
Okay. No doubt. Speaking of other countries, let's just shift gears to Germany. They are saying that their recession is done and dusted. If it's true, how did they pull that off?
Let's see. So Germany is almost like the economic powerhouse of Europe. So it's got the biggest economy. It's also got a very large population in the European Union. And it's also a very important player in global exports. Now, back in 2020 during the pandemic, Germany's GDP took a 4.9% hit. And it compared to the rest of the European countries, this is actually quite low.
That's if you say that it's very low compared to the rest of the European countries as such, it's very impressive, right? I mean, how did they do it?
First and foremost, Germany had a very strong testing and tracing system. And in addition to this, there was great coordination and communication between different levels of the government.
Okay.
Also, the people over there, they stuck to the health guidelines. They actually followed the instructions. Like, a lot of us started taking off our mask, like, no, we won't listen to the medical experts and we won't wear our masks. Germany didn't do that. They actually listened. So they got a grip on the virus quickly, more easily. And this eventually meant that they could reopen their businesses sooner, much quicker. Yeah.
Okay, okay, that's nice. So apart from this, what do you think? What else played into Germany's success in this particular scenario?
Apart from the fact that they actually listen to their medical professionals,
Yeah, yeah.
Germany's economy is like a diverse machine. Like, think of a mechanical organism churning out all sorts of top-notch stuff,
Mm-hmm.
be it cars, be it chemicals, electronics, machinery. Like, German economy is very diverse, and this diversity is what helped them weather the economic recession storm, because they didn't have to depend on just one thing. They had multiple products and multiple goods and commodities.
Okay. So they have got an edge in terms of global trade, right?
Exactly that. And because of the diversity they have, they could handle the global demand much more efficiently compared to other countries during the pandemic, especially during the pandemic.
Okay. Okay. So, just out of curiosity, did they have any kind of special tricks up their sleeve in this whole process?
Okay, so now comes the most interesting part over here,
Okay.
and we are going to talk about the role that China played in all of
Okay.
this.
Okay.
China was one of the few countries with an actual positive growth in 2020.
Mhm.
And since China is Germany's biggest trading buddy,
Mhm.
I'm saying trading buddy because 9% of Germany's exports
Hmm.
is because of China. China exports 9% of them.
Okay.
That's why it was a win-win situation for Germany and China.
Mhm.
China recovered faster, and they started demanding German goods like cars, machinery, and all of this trading led to a huge boost for Germany's economy.
Okay. So they got a little lift from China's recovery, is what you're trying to say.
Yeah, they definitely benefited a lot from it. Like Germany's industrial sector uh, greatly benefited from China's trade.
So, like we always say about Germans and Germany and their tactics, so was there anything else in their bag of tricks?
They had a strong fiscal situation even before the world was hit by the pandemic. Like they had a budget surplus. They had very low debt because before things went haywire. Their debt was very low. They had a budget surplus, and because of this, they had more. You can say they had more financial wiggle room.
Okay.
With support for workers and businesses.
Okay. So you just now said about support for workers and businesses. What kind of support are we talking about? What kind of support did they actually offer?
So Germany had this very cool thing called Kurzarbeit. I'm not sure if I'm pronouncing it right, but
Okay.
it's called Kurzarbeit.
Kurzarbeit. Okay.
Yeah, Kurzarbeit. So this word means short time work. Literally, it means short time work.
Okay.
So under this scheme, employers can cut their workers' hours and pay them temporarily instead of laying them off completely.
Okay.
The government would then cover part of the income loss.
So that's like a very smart way to keep the jobs at the same time the money is flowing too.
Yeah, it actually helped workers a lot to retain their skills and also their jobs, as well as stay productive during the tough times presented by the pandemic. Like when things started picking up, they were just ready to bounce back because they didn't lose their jobs. They still had a source of income, and the government was supporting them by, taking care of their income loss.
Okay. Was there any other support measures that were provided?
The government offered grants, loans to small businesses. They reduced taxes for households and companies. They started spending more on social stuff and healthcare, and also they supported investments. and exports. They actually did a very all-rounder job during the time of the pandemic. German government, the government of Germany.
So it wouldn't be wrong to say that they followed from whatever you said. To me, it sounds like a very good, comprehensive strategy.
It actually was a very carefully planned strategy for Germany. Like all these measures that they adopted, it added up to a whopping 36% of GDP in 2020 alone. Like it was one of the highest among the advanced economies.
So they threw a good chunk of change with the whole mix.
You can say that. Like these moves certainly helped cushion the economic blow and also put a stop to deeper recession. This could have been worse. This could have been way worse.
Okay, and this is what you're saying helped them to recover faster.
Germany's economy started growing again in the third quarter of 2020 with an 8.5% bump. So yes, in answer to your question, it definitely helped them recover quickly. But again, when things was looking quite good in the fourth quarter, they were hit by a 1.7% contraction. And why this happened? Because of another wave of infections and also stricter measures of social distancing.
So unlike a fairy tale wherein everything is happy, everything is positive, everything is going in a linear manner, the Germany's recovery, it wasn't all a smooth sailing, right?
It definitely wasn't. Like it had its own ups and downs. Like that's why the International Monetary Fund, it predicted that Germany's GDP will grow by 3.6% in 2021 and 3.4% in 2022.
Okay.
And this was thanks to the speedy vaccine distribution, the gradual lifting of restrictions, a comeback in local and global demand, and a big recovery plan, which was all about boosting public investments, adopting greener and techier stuff. Basically, Germany was focusing on projects that made its economy more environmental friendly and tech savvy.
Okay.
For example, renewable energy, electric cars, better tech infrastructure, artificial intelligence, which is all the buzz right now.
So they're gearing for the future too with all this.
You can say that they are pretty much well equipped to tackle a lot of challenges head on compared to other countries.
Awesome. Well, Sufi, a massive thanks for dishing out all the fantastic insights and the analysis, and thank you for explaining it in a much simpler manner than most of these places where things like these are discussed. And big thanks to you. It was very clear for me, and I hope it was very clear for everybody who has been who's listening to this. It's been an enlightening chat.
Of course. Thank you so much, Ashams, for being an amazing host. Like I really had a good time sharing all the insights and information with our audience and you. It was great.
And to all of your wonderful listeners out there, thanks for joining with us in this podcast. Hope you found it fascinating as we did. How we learned things, how I learned it basically. I can say from my personal experience at the time I had, I definitely learned things. I got answers to different questions and thoughts. I hope just like how we found it interesting, you also must have gotten different questions answered. But if you got any other questions or thoughts, please feel free to reach out to us anytime. Once again, it's me, Ashams, your host, and Sufi, the co-host, signing off from this podcast, episode 1.